Ever wish you could, like, I don't know, be in the room when Warren Buffett's analyzing a business?
Yeah.
See how his mind works?
Right.
Well, today we kind of get to do that.
Yeah.
We're diving into his 1990 letter to Berkshire Hathaway shareholders.
These letters are amazing.
Right.
They're like little windows into how he thinks, not just about investing, but about business in general.
It's true.
Yeah.
And it's 1990.
Yeah.
I mean, the world is,
a different world.
worried about the Gulf War.
Oh.
Things are happening. What's Buffett doing?
Right.
He's laying out this timeless business wisdom.
Yeah. And that's a key takeaway right there.
Yeah.
Is that, he's got his eye on the fundamentals. He's tuning out all that noise, thinking long term. That's a constant for him.
Yeah. And he says something kind of funny in this letter.
Okay.
He describes his investment approaches as, and this is a quote, lethargy bordering on sloth.
Yeah, that's classic Buffett.
Right. Like you don't...
Doesn't sound like a guy running a multi-billion-dollar company.
No.
Right.
Like, is he just like,
But that's the point he's making, right?
Yeah.
It's that,
kicking back?
it's not about chasing every hot new thing. It's about patience. It's about discipline. Not giving in to all the hype and noise that's out there.
So he's doing his homework.
Absolutely.
Waiting for the right opportunity.
Waiting for that perfect pitch.
Then bam! Like Wells Fargo in 1990.
Exactly. And that's a perfect example
Tell me more.
of his margin of safety principle at work.
No. Yeah. The process.
Which we'll dig into more, I'm sure. But basically, he's not just buying a good bank, he's buying it at a discount
Okay.
because the market is undervaluing it. Fears about California real estate, which turned out to be overblown.
So he's profiting from other people's mistakes.
Exactly. But it wasn't just the price tag. He was also buying into a management team that he believed in.
Okay.
Carl Reichert and Paul Hazen.
Right.
Ran a tight ship, very efficient, avoided a lot of the reckless lending that was tripping up other banks.
And he saw
He saw it.
the strong fundamentals. I mean, consistently exceeding a 20% return on equity, 1.25% return on assets.
Right.
But it was the people, too.
He's big on that.
Yeah.
He talks about that a lot in this letter. Finding those exceptional management teams.
He did it with Wells Fargo.
He's done it throughout his career.
Yeah.
Yeah.
Trusting those people.
Trusting them, getting out of their way, letting them do their thing. But let's go back to that margin of safety for a second.
Okay.
This is crucial for understanding how Buffett views market downturns.
I was going to say, yeah.
Most people see a crisis. He sees a sale.
It's like he gets excited when the market crashes.
In a way, yeah.
Yeah.
Because when prices plummet, that margin of safety, it acts like a cushion.
Okay.
It lets him buy those great businesses at a fraction of their actual worth.
It's like he's not afraid to zig
Exactly.
when everyone else is zagging.
He's not following the herd.
Yeah, like with those RJR Nabisco bonds.
Ah.
That one, I have to be honest, had me scratching my head.
A lot of people felt that way at the time. It
Yeah.
seemed so out of character.
It did.
But this is why we dig into this stuff.
Yeah.
Because when you understand his thinking, it makes sense.
Okay.
He saw value where others just saw risk.
Okay.
Because he took the time to really understand the company, the management, the terms of those bonds.
Okay.
It wasn't just about being contrarian,
Right.
It was calculated risk.
Like those magic eye pictures, You got to
Yeah.
kind of blur your vision.
Yeah.
And then you see the image.
You got to look beyond the surface to see what's really there.
Yeah, he did that with RJR Nabisco.
He did.
So we've seen how he analyzes a company, but what about Berkshire Hathaway itself?
Mm-hmm.
I mean, he's got this phrase in here, we buy to keep. Sounds simple enough,
Right, but there's more to it than that.
but there's got to be more to it.
Yeah.
It's more than just like holding on to a stock certificate or something, right?
Right. It's about their whole approach to acquisitions.
Okay.
He even includes this letter in the appendix. It's the same letter he sends to business owners who are thinking of selling.
Oh, interesting.
And he basically positions Berkshire as the anti-corporate acquirer.
Okay.
They're not coming in to gut the place, flip it for a profit.
Right.
He promises a hands-off approach, respect for the legacy they've built.
So he wants them to keep doing what they're doing.
Yeah. Strong management's already in place.
Right.
Let them do their thing.
He just wants to, I don't know,
Yeah.
provide a platform or...
Yeah, provide the resources, the environment to thrive. And it's interesting because a lot of these businesses, they're not, flashy or high growth,
Right.
but they're solid. They generate cash.
Okay. Speaking of things that are not flashy,
Yeah.
can I make a confession?
Sure.
I've always found the insurance side of Berkshire a little...
A little opaque.
Yeah, a little like,
Yeah.
it's just not as exciting as like, I don't know, owning a chunk of Coca-Cola.
Right. It's not as glamorous.
No.
But here's the thing.
Okay.
Insurance is absolutely crucial to Berkshire's success.
Really?
Buffett himself has said if he could only own one type of business, it would be insurance.
He said that.
He did.
Why insurance? It just seems so...
It's not about the excitement.
Okay.
It's about the cash. It's a steady, predictable stream of cash.
Yeah.
And it all comes down to this concept called float.
Float. Okay.
Yeah. So think of it this way.
Yeah, but...
You buy insurance. You pay your premium up front.
Right.
The insurer, they pay out if something bad happens. But in the meantime, they're holding on to that premium money.
Right.
And they get to invest it.
Okay.
That's the float.
Okay.
And Berkshire's insurance operations, billions in float.
Wow.
Which they then use to invest in other businesses.
So it's like this giant pool of money that they're
Essentially, yeah.
constantly getting.
Fueled by those premiums.
Okay.
Yeah. But here's where Berkshire's advantage really comes in their cost of float.
Cost of float. Okay.
This is the cost associated with using that float.
Okay.
And Buffett spends a good chunk of this letter breaking it down, how he calculates it.
And he's really transparent about it, too. Like he
Oh, yeah, he lays it out.
breaks down the track record year by year.
He wants shareholders to understand exactly how this engine works.
Okay.
Because that low cost of float, that's a huge competitive advantage.
Okay.
It means they can make investments that other firms, they wouldn't be able to justify it.
Because they're not getting the same return.
Exactly.
So they're playing with, it's almost like they're playing with house money.
In a sense, yeah.
And the house is winning.
Right. And this leads to another point about Buffett and risk.
Okay, yeah.
He's not afraid of it,
Okay.
but he's very calculated.
Okay.
He talks about writing super cat policies. You know, these are the ones that cover catastrophic events.
The big ones.
Huge potential losses.
That seems so risky.
It is inherently risky, right?
Yeah.
But he's comfortable with that volatility.
Why?
Because he's playing the long game.
Okay.
He understands these policies. They could lead to some big swings in their insurance results one year to the next.
Okay.
But he sees the potential payoff.
Right. So it's all part of the plan.
It's all calculated,
Yeah.
especially with that lower cost of float. It gives them more room to maneuver.
That's actually making his whole thing about being comfortable with volatility make a lot more sense now.
Yeah. It's not about avoiding risk altogether.
Right.
It's about understanding it, pricing it appropriately,
Yeah.
making sure the potential reward is worth it. But, you know, even beyond all the numbers, the investment strategies,
Yeah.
there's this deeper theme running through this letter.
Okay.
Buffett's emphasis on values, on culture,
This is what I love about Buffett. Like, it's not just the money.
it's about doing it right.
Yeah.
And he lays out these 6 qualities he looks for in a business.
Okay.
And it's not just about the financials.
Right. It's like...
He's looking for businesses that are simple to understand, that have this consistent history of earning power,
Right.
and importantly, that are run by people he trusts and admires.
He calls them business magicians.
Right, he does. But he's also quick to point out that he can spot them, he can't create them.
Yeah. It's like he's putting out a help wanted ad.
Right.
If you've got this kind of business, come talk to me.
Exactly.
It's so simple.
And you know what's amazing? These criteria he lays out,
Yeah.
they haven't really changed that much.
Oh, really?
He's still looking for those companies with a strong competitive advantage.
Okay.
Consistent track record of profits.
Yeah.
And you know what else? Honest, competent leadership.
Still comes down to the people.
Always.
Yeah, it does.
Always does.
That's so interesting how, like...
Timeless, right?
Timeless, yeah.
Yeah.
I mean, the rest of the world's out there chasing the next
big thing.
fad, right.
Totally.
But he's like, nope, fundamentals.
Sticking to his guns.
Then look at him.
It's worked out pretty well.
It really is.
And that's a good lesson for all of us, right?
Lesson of time?
Whether you're, investing little or a lot.
Yeah.
It's so easy to get caught up in that short-term noise.
Oh, I know. Yeah.
But he reminds us the real success, it comes from thinking long-term.
Okay.
Focusing on value and sticking to your guns, even when,
Even when it feels like everyone else is losing their minds.
Exactly.
So we've got to tune out that hype.
Tune it out.
Look beyond just, like...
The numbers or whatever.
Understand the businesses you're investing in.
And don't be afraid to be different.
Be like Buffett. He's not afraid to zig when everyone else is zagging.
But there's a method to it.
Oh, absolutely.
It's not random.
He's not just being different to be different. He's got a plan.
This has been eye-opening. I mean, Buffett in 1990,
Yeah.
still so relevant.
Totally.
Like, it makes you wonder, are we missing opportunities because...
Oh, we're so caught up in the day-to-day.
Yeah.
Right.
And he even says, this is another great quote, "It's optimism that is the enemy of the rational buyer."
Think about that for a minute.
Yeah.
That's powerful.
It is. Stay grounded, stay objective.
Even when everyone else is getting swept up.
Especially then,
Yeah.
you know?
He had another great line in here. He said, many men would rather die than think.
Oh, that's a good one.
And then he says, many do.
Oh, man.
Truth.
I mean...
Words to live by.
Words to live by.
Yeah.
Don't be one of those guys. Think for yourself.
There you go.
Well, this has been fun.
A lot of fun.
What a deep dive.
Into the mind of Warren Buffett.
Yeah. Until next time, everybody, keep exploring, keep learning.
Keep that curiosity going.
Yeah, and remember, fortune favors the well-informed.
Indeed it does.